Ladies and gentlemen, good day and welcome to ADF Foods Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Uddesi from EY. Thank you, and over to you, sir.
Thank you, Manav, and good evening, everyone. We welcome you to the Q4 and FY24 earnings conference call of ADF Foods Limited. To take us through the results and to answer your questions, we have with us the top management of ADF Foods, represented by Mr. Bimal Thakkar, Chairman, Managing Director and CEO, Mr. Sumer Thakkar, Mr. Shardul Doshi, the Chief Financial Officer, and Mr. Sumer Thakkar, the General Manager, Sales and Strategy. We'll start the call with an overview of the business and the current business update by Mr. Bimal Thakkar, and then Mr. Shardul Doshi will give his comments on the financials. As usual, the standard safe harbor clause applies while we start the call. With that said, I now hand over the call to Bimal. Over to you, Bimal.
Thank you. Good afternoon, everyone. I'm very pleased to inform you that we've recorded our best ever quarter in terms of revenue as well as profitability matrix on a standalone and consolidated basis, led by increasing volumes and better product mix. Our revenue surpassed the 500 crore milestone in financial year 24 on a consolidated basis. Our consolidated EBITDA margin was at 20.2%, which is well above our target of high teens. On a standalone basis, we have nearly doubled our EBITDA and PAT over the past 2 years, a testament to the operating leverage playing out on a sustained basis. Coming to the quarter gone by, our consolidated revenues increased by 24.8% to 153.6 crores on a year-on-year basis, backed by demand-led growth. We are seeing a marked improvement in this growth, hence expect it to be sustainable in the future as well. We continue to witness strong demand across all our brands. Our flagship brand, Ashoka, saw continued addition of new products and launch in new markets, as well as increased penetration in existing markets. Our India-focused brand, Soul, has seen an initial good response. We are finalizing new product launches, and we expect to launch Soul in the modern trade in the last quarter of financial year 25. We've committed an investment of 13 crores for Soul in financial year 25. We are aspiring to achieve 100 crore revenue within the next 3 to 4 years in the domestic business. Our Truly Indian brand has been launched in the US, and we've seen a good response by way of listings in various supermarkets. This brand too is currently in an investment mode. We have a new team in the US and will be investing in this brand to target the mainstream audience. We are launching new products in the second half of financial year 25 for this brand, and we believe this brand has the same potential as our Ashoka brand in the long run. Our agency distribution business has not grown the way I would have liked it to. However, I would like to state that the same is not due to any demand issues. Rather, it has been hampered by supply chain issues. Our principals are working hard to sort the supply chain issues, and we are optimistic that these issues will be sorted out, resulting in a good growth in financial year 25. We continue to be bullish in terms of our outlook for 25 and expect revenue growth to be upwards of 20%. In terms of margins, we are looking at high teen margins on a consolidated basis. We will be making investments in our India business as well as the Truly Indian brand. We have also broken ground in our Surat Greenfield project and have committed 75 crores for phase 1 expansion. This expansion will be to this expansion will cater to both new as well as existing lines for our frozen foods. Overall, we are excited about the future potential of our business and remain focused to achieving healthy and sustainable growth in future. I now hand over to Shardul for his comments on the financials.
Thank you, Vimal. Good evening, everyone. I'll first share the standalone performance. We recorded revenues above rupees 400 crores for FY24. The same being at rupees 414 crores, a growth of 17.2% over FY23. Our EBITDA was rupees 102 crores, a 32.8% increase Y-on-Y. We managed to expand EBITDA margin by 290 basis points, reaching 24.6%. We see this as a tangible outcome of our continuous focus on investing in our brands and innovating in our product portfolio. Our PAT was rupees 79.6 crores, a 32.7% increase from the previous year, with a PAT margin of 19.2%, an improvement of 220 basis points from the last year. Now let us look at the quarterly figures. In Q4 of financial year FY 2024, we saw revenues from operations at 129 crores. This marked a 31.3% Y-on-Y growth and 24.9% Q-on-Q increase. Our EBITDA for this quarter was rupees 31.8 crores, a Y-on-Y increase of 12.6% and quarter-on-quarter increase of 20.5%, while our EBITDA margin was 24.7%. We saw some impact of Red Sea crisis in terms of higher freight rates, which partially impacted our EBITDA. However, we were able to mitigate the same through cost control and process efficiency. PAT for the quarter was rupees 25.3 crores, a 24.7% increase Y-on-Y and 24.8% increase quarter-on-quarter. Our PAT margin for the quarter stood at 19.6%. Moving on to the consolidated performance, we crossed to rupees 500 crores revenues for the first time. For FY24, revenue from operations was rupees 520.3 crores, a 15.6% increase Y-on-Y. EBITDA was 105 crores, an increase of 30.1% Y-on-Y. EBITDA margin stood at 20.2%, expanding by 230 basis points Y-on-Y. Profit after tax was rupees 73.8 crores, up 32.1% Y-on-Y, with PAT margin of 14.2%, an increase of 180 basis points on a yearly basis. Coming to the quarterly performance, our revenues from operations for Q4 FY24 was rupees 153.6 crores, an increase of 24.8% Y-on-Y and 18.5% increase from the last quarter. Our EBITDA for Q4 FY24 was rupees 34.3 crores, recording an increase of 29.6% Y-on-Y with an increase of 27.2% from the previous quarter. Our EBITDA margin stood at 22.3%. Our PAT for the quarter was rupees 25 crores, marking a Y-on-Y increase of 55.7% and quarter-on-quarter increase of 31.1%. For Q4 FY24, PAT margin stood at 16.3%. Our capex for FY24 was rupees 8 crores in debottlenecking and another rupees 4 crores in cold storage project. Our balance sheet continues to remain debt-free as on date. The board recommended a final dividend of rupees 1.20% per share, which is 60% on equity share of rupees 2 each. This is in addition to the special dividend which we had declared of rupees 4 per share, which was 200% already paid during FY24. And the total dividend payout was rupees 5.2 per share, which is 260% for FY24. Overall, we continue to judiciously invest in our manufacturing capabilities as well as our brand building exercise in order to focus on increasing our margin profile as well as deliver greater returns in the long term. With this, I now request Ravi to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, we have our first question from the line of Rishi Maheshwari from Aksa Capital. Please go ahead.
Hi, thank you for taking my question and congratulations to the team. Splendid numbers. I'd like to understand a little more granularly for the reason for the gross margin improvement. It seems very healthy improvement. So first time you've clocked this kind of gross margin. So was it largely got to do with the pricing increase that you would have taken in products, or was it mix change, or was it raw material reduction? If you can give me some flavor on that.
It's primarily due to the mix change. If you also see the processed food, as a share of total revenue is also higher compared to the previous quarter, and hence the gross margins are better in this quarter.
So I was wondering, you alluded to the margins in the future at about high teens. We've already clocked about 20% EBITDA margin in this year, as I hear for the full year. So why would we think the margins would have any form of drop? Is it got to do with the investments in Truly Indian launch in the US?
Yes, it's for both the Soul brand and the Truly Indian brand. Both these brands are in an investment mode. These are new businesses, and you will reap benefits in the future. So it's because of that we are seeing. That's why we are projecting EBITDA margins to be in the high teens for this year.
So what is the order of investments that we are looking at in Truly Indian and Soul?
So if you see, for Soul, we've committed about 13 crores. And for the Truly Indian brand, I would say we would be at least another 8 to 10 crores investment that we'll be making.
Right. Additionally, if you can also, let us know if there is any headway in terms of the large grocery stores you were earlier alluding to, perhaps looking into getting into one of the largest grocery chains in the US. And there was some conversation on that front, perhaps it did not fructify, or I'm not sure how it has been. So if you can give us some sense of, any further, breakthrough in any of these large grocery stores in the US.
So, this is a continuous process. We keep presenting to the chains. We've got listed in 2 more chains in the US, which will give us, for the Truly Indian brand, we will have some 300 stores from these 2 chain stores. And then we continue to present to other stores as well. So this is an ongoing process. Even in the UK, we are presenting to some stores in UK, in Australia. So our focus, we want to grow our brands now in the mainstream market. So this gives us a totally different audience compared to the current South Asian diaspora that we are catering to. So this is going to be an ongoing process. And we have had good successes, and it takes time to build up. Listing is one part, then, to create the offtake, invest on marketing. So this is a gradual process, but the response has been very encouraging.
Very encouraging to hear. Thanks so much. All the best to you.
Thank you.
Thank you, sir. We have our next question from the line of Shalini Gupta from East India Securities. Please go ahead.
Good afternoon, sir. I had 2-3 questions. The first one being that, my first question also has been answered in terms of the reason for the strong sales growth. Now, I wanted to ask you, sir, what is the process of building a brand in the US? Because in India, the way it is done is that you to spend some amount of money on advertising and make sure that there is enough distribution. So how is it like in the US?
So I think building a brand is the same everywhere. The process is same, but it first starts with distribution, then it starts with marketing. So in the US, when you're building up within the supermarkets and mainstream, there are listing fees that have to be paid. So you first build up the distribution, get your product in the stores, and then you create the pull for those products once they are listed. So yeah.
Sorry, so when you saying you've got listed, it means that you can sell your products to that superstore. Is that right?
That is correct.
Okay. So how many listings are you looking at in financial year 25?
Well, all these stores, the major chains have their calendars for review of their products for listing. So we present everywhere possible, and so far we've had some good success. We are still waiting for news from certain other stores, other chains. So like I mentioned, it's an ongoing process.
Okay, and last question from my end, how many listings do you currently have?
So as I mentioned, in the US currently we've got confirmed listings with two large chains at the moment, which gives us access to about 350 outlets. We are awaiting some more news, so we will know in the course of the year.
All right, and in the UK? Not UK, I mean EU?
Well, again, in Germany is where we've got the truly Indian brand. There, I think our number of stores should be in excess of 1,000 or 1,500 stores, where we are there in the major chains out there. UK, we would be in about, I would say, close to 500 to 600 stores across across 4 major supermarket chains there.
All right. Thank you so much, sir.
Yeah.
Thank you. We have our next question from the line of Kuber Chauhan from Anand Rathi. Please go ahead.
Yeah, am I audible?
Yes, you are.
First of all, congratulations for a great set of numbers. Sir, I have a couple of questions over here. You said that agency distribution has not grown up to the mark due to supply chain issues. So what are things or what are measures we would be adopting, to mitigate or to sort it out in FY25? And secondly, you have incurred a margin of 22% in this quarter, basically. So how sustainable is it, and in coming year or coming next 2 years, how you are looking at your margins and your top line growth?
So to answer your first question, the supply chain issue is more from our principal, which is the Lipton Tea Company, the ones who have acquired the brand from Unilever. So, they have just acquired the tea business from Unilever 2 years ago. So the whole transition did not go as smoothly as one expected, and you can imagine it was a big acquisition. It was a 4.5 billion euro acquisition. So they are having some issues at their back end on the factories and things like that. But the things are getting under control. We've seen in the last 2 months, supplies have been coming in. They have been getting much better on the supply. So in this financial year, we hope that the fill rate and their order supply rate to us will be a lot more compared to last year. So it's more something that they need to sort out, and they are working to sort that out. As far as the margins go, as I mentioned, I mean, our EBITDA margins, you will see, will be in the high teens because of the investments we intend to make on the businesses, which is the India business and the US business for the truly Indian brand.
Then how much of the top line growth we're targeting for FY25?
So we're looking at upwards of 20%.
It's a volume growth or revenue growth?
Both. Even for this year, it's been volume growth and revenue growth has been more or less equal.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to take questions from all the participants, we restrict the questions to 2 per participant. If you have a follow-up questions, please rejoin the queue. We have our next question from the line of Umang Gada from Alexir Equities. Please go ahead.
Hi, am I audible?
Yes, you are.
Yeah, firstly, congratulations on great set of numbers, really encouraging. So I had 2 broad questions. My first question was on the Red Sea crisis and the freight cost. If you could help us give us some idea that the costs are remain to be elevated in some near term or are expected to cool off, which will lead to some margin expansion. So that some color on that would be helpful.
So Red Sea crisis kind of impacted us around December third quarter, where we were not getting containers and the freight costs started going up. Overall, in Q4, actually the issue of container shortage got sorted out very quickly, and the shipments were on track to most of our customers, and hence the top line were achieved. In terms of impact, it had a 2% impact. Freight cost was around 7% in the previous quarter for us. Of the top line went up to 9% in Q4.
Okay. So now, I mean, are any near term is it expected to cool down, or these rates will be expected?
No, the rates have been actually coming down from April onwards, so hopefully it will be back to normal again around 6-7%.
Yeah. Okay, great. And my second question is somewhere related, as you mentioned that these Red Sea crisis had impacted our shipments, and Q3 the growth rates were a little off. So the Q4, if I remember correctly, in the last phone call you mentioned that the shipments are transferred to Q4. So is it why the Q4 growth rate has been higher than what is actually has been? Is it a kind of a one-off, or these kind of rates should be sustainable in the near future as well?
No, so there were certain shipments which moved to Q4, but that's not, I think you cannot, that's a very small impact as such. Overall, actually our revenue in Q4, actually we have been working to increase our shelf space. Also, we are doing very strong marketing activity there. We have been investing on people, and that's all led to increase in our volumes in Q4.
Okay, so the growth has been organic and because of the good momentum. There is no one-off aspect, right, in the growth rates?
Yes.
Great. That were my questions, and thank you for answering.
Thank you, sir. We have our next question from the line of Chirag Jain from Yoga Capital. Please go ahead.
Thanks for the opportunity, sir. Sir, I wanted to know a bit about more on the capex side that we are doing. Currently, we are more on the lower side of the fixed asset turnover of 2, and you are targeting around 3 for the new plants that are coming in. So, could you give a color on that?
So, if you actually exclude the leasehold assets, our asset turn is actually much better compared, even more than 3 what we are actually planning on the greenfield. So, in fact, of our greenfield, what we are planning, we are spending almost 75 crores. That's the budget which we have, and it will give us almost a top line of 250 to 275 crores. So that's our expected top line.
So, am I right in assuming that the land isn't owned by us?
No, so The leasehold, see the warehouses which we have in our US, those are leasehold.
Yeah.
And even in the land which we have, though they are called leasehold, but these are 100-year leases. So these are not like a small leases. This is they are as good as owned in India, where the factories have been made.
Okay, understood. So second question was on more on the advertising side. So we have seen some brands phasing out because they have reduced the ad spends. So do we see something of that in US or in other markets also?
No, we continue to increase our advertising and marketing spend, in fact. So we are very committed in growing our brands, which is why even on Truly Indian and Soul, we are making investments in the brand.
Yeah, sir. I heard that point. I was thinking for the more longer perspective when we have a brand build and something we start to taper somewhere we around start to taper our marketing spends. So is that on the cards, or we would be continuously advertising for the next 2-3 years?
No. See, what happens is as the business builds up, of course, your percentage on the marketing spend reduces, but in absolute numbers, it still continues to increase. Okay, so that is how you are seeing how you will see a reduction in terms of percentage, but not in terms of absolute numbers. You are in a FMCG space. You need to be on top of mind on a regular basis.
Yeah. So if I may ask a last question, that are we focusing on more in Indian market where the competition is very high?
Yes, I mean we are. The Soul brand is meant for India, and our goal is in the next 3 to 4 years to get the India business up to at least 100 crore size.
So wouldn't be much prudent if we invest in other export markets and get a much higher margins compared to Indian business?
Well, the India opportunity is also going to be a very important one going forward, and we want to be in the Indian space. We continue to invest on our international business, so it's not that by putting money in India we are stopping investing in the international markets. So we will do India is also a very important market. The Indian consumer has come of age, and packaged foods is going to grow in this country. So we want to be part of that action.
I was thinking more from the opportunity cost point of view, because if why we don't invest in some other country which has higher demand for the frozen foods and other products which we produce. So that was my thought.
No, agreed. Like I said, we continue to do it in the other markets, and India will be a market to reckon with in the future. So we want to be there for it and start the investment. It takes years to build a brand in a business. So we want to make that start now. We feel this is the right opportune time for us to start our entry into this market.
Okay, thank you. I will get back in the queue as I have another question also.
Yeah.
Thank you. We have our next question from the line of Devanshu Sampath from Avendus Wealth. Please go ahead.
Yeah. Hello, sir. Good afternoon. Few questions.
Sorry to interrupt, Mr. Devanshu. Can you please be a little louder?
Yeah. Hi. Is this better?
Yes.
Yes, sir. Good afternoon. I have a few questions related to your, the saliency when it comes to your B2B business, and if you can give a sense of also what is the starting base for FY24 for Soul and Truly Indian.
No, so Soul has been now doing well as far as I think month on month we've been increasing 15%. So base for Soul, the Indian business is around 3 crores to start with right now, but my run rate has already come to 6 crores when we look at the last few months number. And as far as Truly Indian is concerned, this is almost I think 3 to 4% of our top line, and we'll be expecting it to grow further from here.
So just to clarify, when you said 3-4% top line, is that standalone or console?
Standalone.
Okay. And the B2B business also, the share of that?
B2B for us is around 23%, right?
Again, standalone, right?
Of standalone, correct.
Okay. And Mr. Thakkar, you mentioned that you expect Truly Indian to become as big as Ashoka in a few years. So so assuming it to be around 250 plus Ashoka's revenues this year. So is that like an internal target where you expect this to be achieved? And
Yes.
Also, what can be expected of Ashoka as well? Is the focus going to shift on Truly Indian, or both the brands can fire together?
So both the brands are targeting different audiences. So Ashoka will continue to focus. It will continue to be the flagship brand for the South Asian diaspora across the world. And Truly Indian is for the mainstream market. Now the mainstream market, like in the US for us, is new. So we've got a huge runway there. It's a much larger audience that you are catering to. Indian food overall is getting more and more popular in the United States and other parts of the world. So both are different audiences, and we expect both the brands. I mean, a Truly Indian will grow at a much higher percentage because it's at a very low base at the moment. Ashoka, we expect Ashoka to continue to grow at about upwards of 20% as well.
Okay, so would it be fair to expect Ashoka side business in about 3 years or 5 years? What will the number that you guys are working with?
So we are looking at anywhere between 3 to 5 years for the Truly Indian brand to get to that. It might happen sooner depending on how the listings come through, how the offtake is. So, but yeah, 3 to 5 years is our timeline which we put in for this brand.
Sure. And can you also share the export incentives for 24?
Almost 20 crore.
20 crore. Sure. That's it for now. I will come back in the queue. Thank you.
Thank you.
Thank you. We have our next question from the line of Hatim Brochwala from JM Mutual Funds. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Hello.
Yes.
Yeah, hi. Sir, my question is on the new listing which was done during the quarter. So which were those chains which got added, and how many stores access got added during the quarter?
So this was in the UK. We got listed with Tesco. 2 or 3 got listed in there, and I think the number of stores was about 300 stores. It's still very early days, but we expect this to be at least £1 million in revenue for the first year.
And so there were two chains got added, right? Or only one?
Tesco and Morrison's also, which is another 120 stores which we got listed in.
Okay. So the growth this quarter was very sharp, QOQ. So how much was attributable to this new addition, and how much was like on an ongoing basis?
So I would say the new addition would have probably helped by about 15-20% overall in the quarter sales, but in the incremental quarter sales. But 80% was within the existing stores that we were increasing our shelf presence and increasing the depth in those stores.
Okay. And my last question is on the Soul business. You mentioned 6 crore run rate. This is for a quarter, right?
No. So last financial year, our top line on Sol was about 3 crores. See, last 2 months, with the way the offtake has been and with the limited online presence that we are already now at if I have to extrapolate it into 12 years based on the last month's sale, we are at a 6 crore number, but we expect that to grow, and our internal target for this year on Sol is around 30 crores.
And sir, how is the profitability in this business currently?
So the gross margins are good, but a lot of money is being spent on brand building. So it is going to make money for us. We will be in an investment mode for the next 2 years in this business.
So it will break even after 2 years?
Correct. Year 3, we expect it to start making money.
Okay, sir. Thank you, and that's all the best.
Thank you. We have our next question from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Really, Vimal bhai, doing very fantastic. Sir, different unit at which capacity running means Nasik, Nadia, then Surat, and any plan to increase the capacity?
So yes, Mr. Ravi, Surat is our greenfield project. We have just broken ground, so we expect that factory to be ready within the next 15 months. Okay.
Next 15 months. Okay.
Yes. And Nasik and Nadia, we have been expanding capacities, increasing capacities out there. So some lines we are upwards of 80%, 85%. So that's both the factories overall right now are in most of the lines upwards of 70%.
70%. And other than Surat, any capex plan?
We are doing some more capex in Nadia and in Nasik. So overall, for between Surat, Nadia, Nasik, we are looking at about 100 crore capex.
In how many years?
In the next 1.5 years.
1.5 years. Sir, in distribution business, no growth since last 3 years. Any specific reason, sir?
As I mentioned, this business has been bought. So this was a business owned by Unilever. Okay, the teas, Red Label tea, Taj Mahal tea. That business internationally, Unilever has sold to private equity, a company called Ekaterra, or they call themselves now the Lipton Tea Company.
Okay.
So that whole acquisition has been last 2 years. So there's been some amount, the transition did not go as smoothly. So there has been some disruption in supplies from their side because of this whole shift. But they are now, over the last 1-2 months, we've seen things are getting better. So this year we will hope to increase that business as well.
So Patanjali, we are not selling anything.
Sorry to interrupt, Mr. Ravi. I would request you to rejoin the queue as there are several participants waiting for this.
This is the question of my older one, not new one. But anyway.
So, so Patanjali, we were only doing for UK, right, Mr. Ravi, and we have decided to phase that out because it did not go the way we expected it to go.
Okay. Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to strictly one question per participant. Should you have a follow-up questions, we request you to rejoin the queue. We have our next question from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Good afternoon. Am I audible?
Yes, you are.
Congratulations, Mr. Thakur, for the fantastic results. And my question was with respect to, like, is the company in talk with any other FMCG company besides Lever?
We are in discussions, but our focus is, again, we want to be very selective on this agency business that we take. So unless and until it doesn't meet our criteria, we don't take on brands or other businesses. But yes, we are in talks with one or two more companies.
Thank you.
Thank you. We have our next question from the line of Ashish Agarwal, a shareholder. Please go ahead.
Yeah, am I audible?
Yes.
Yeah. So my question is, like, we see that we are getting the growth and we are doubling our kind of aspirational in the next 3 years for revenues. Where do we see the margin expansion coming from in the next 3 years? Is it going to be truly Indian, which is going to give us a huge operating leverage, or it's going to be some other area?
Well, the Ashoka brand continues to be the flagship brand. So you will continue to see that brand contributing well. Truly Indian also is a highly profitable brand. In the US, it will be in an investment mode, but as we start breaking even, you will start seeing good contribution coming in from there as well. And even the Soul brand, as I mentioned, we have good margins on the Soul brand as well. So it's just now the next 2 3 years being in investment mode for these brands. After that, these brands will start contributing well for the company's bottom line.
Okay. Thank you and all the best.
Thank you.
Thank you, sir. We have our next participant. We have our next question from the line of Jignesh Sipani, a shareholder. Please go ahead.
Hello. Is my voice audible?
Oh, yes, sir.
Yes, sir. I wanted to get a view on what are the pricing in US markets and what are the consumer sentiments and the competition in international markets of our products. That's it, my question.
So when you mean pricing, I mean, we have more than 300-400 products which are all priced very differently. So the end retail price, consumer or MRP as we call it here, ranges from $1.99 and can go up to $10 also. So it's different pricing for different products. Even competition, we have competition from local players, from companies out of India. So it's a mixed this thing, and each market is different.
Okay. Thank you, sir.
Thank you. We have a follow-up question from the line of Devanshu Sampath from Avendus Wealth. Please go ahead.
Yeah, thank you for the follow-up. So just wanted to get a sense on what we can expect from the B2B and private label business in terms of growth that you guys are working with, and maybe if you can throw some light on the the food service vertical as well. Is it is it a business that can be somewhere in the $3 to $5 million region?
So as Shardul mentioned, our B2B business, which is B2B private label, currently accounts for about 23% of our overall revenues, of our standalone revenues. And we, again, our focus is our own brands, but we do take on selective private label business. We are in talks with some big chains at the moment for some private label business. So we expect that business to grow in this year. It'll probably, we might see another 5% growth, so it might go up to close to 30% in terms of on our standalone basis. And the food service side, we are looking at that from the Truly Indian brand. So again, we have been presenting to certain customers, large customers, and as that business starts off, it'll be a slow build-up, so it'll probably start off, and then over the next few years, you can see it coming up to 4 or 5 million.
Sure. Thank you. Thank you.
Thank you, sir. We have a follow-up question from the line of Faisal from HG Hawa and Company. Please go ahead.
My question was with respect to the canned sweets and the frozen sweets that the company has introduced. Like, is it only for the international market or for the domestic market as well? That means I need to talk about the competition from the Bikaji and Haldiram's and so on.
Yeah, no, at the moment, this is only for the international markets.
Okay, and we hired up somebody on the higher side for expand the distribution side?
I'm sorry? I
have we hired somebody? Have we hired somebody higher up to expand the distribution?
Hired somebody where? Here in India?
Yeah, for the distribution. At the executive level?
No, I am not able to understand your question, sir.
Yeah, my question is like, has the company hired somebody at the executive level to expand the distribution in India?
Sorry to interrupt.
We've got a business head for India who's there, and we are building out a team in India for our India distribution.
Okay, thank you.
Yeah.
Thank you. We have our next question from the line of Ashish Agarwal, a shareholder. Please go ahead.
Yeah, I just wanted to know what is the plan for launching more products in Sol brand in India?
So, in this year, you will see we would have another 20 odd products lined up for India under the Sol brand in this financial.
But what are the categories that we have? We see we are into chutneys, pickles, and typically those areas as of now. What is the category that we are looking at?
So we are looking at some frozen foods, some sauces, some dips.
Okay.
Yes.
Pretty much expanding this year into a bigger, broader category, right?
Absolutely.
Yeah. Okay. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have a follow-up question from the line of Chirag Jain from Yogi Capital. Please go ahead.
Sir, my question was on the previous year side. If we see, we had done a QIP in somewhere around 2020. We had raised some 50 CR of capital. Okay. So first part was that we have utilized 26 CR. Okay. So where was this utilized?
So this is not QIP. We had issued the warrants. That's how the money raise was done. And this is largely into the capex which we have done in over last 3 years.
Okay. Second was on that we have been able to generate good cash flows to fund our expansion plans, and we also have been giving out dividends. So that's a mismatch in our understanding.
Sorry, we didn't get the question.
So we have raised 50 CR. Okay. We are annually receiving 70 CR of PAT from our business. Okay. So why did we raise 50 CR?
So this was beginning of COVID, right? I think we had created the war chest at that point of time, and the business has been doing well. It's been rewarding us. So we are equally then ensuring that we are distributing it to the shareholders also.
Okay, understood. Sir, why don't we consider raising debt?
So we are not averse to raising debt. So as and when required, we will. But right now there is no need. We are sitting on a good cash balance, almost of 140 crores plus at this point of time.
Yeah, sir, I understood. I was thinking from the 2020 perspective. At that point in time, we could have raised debt rather than equity because we were having we had almost no debt at that point in time.
No, as I said, I think COVID times were a bit, I think uncertain. So we had chosen to raise equity that point of time.
Okay. Last, my question. So, where have you planned the Surat plant? In which area it is present in?
It's in a food park at Surat. So
can you read?
Gujarat Agro Food Park.
Pardon the area?
Gujarat Agro Food Park. So this is a food park notified by the ministry.
It's I think some 30 kilometers from Surat.
Okay, understood. Thanks.
Thank you. We have a next question from the line of Ashish Agarwal, a shareholder. Please go ahead.
Yeah, thanks for the opportunity again. So I just wanted to know, we have this capex plan and both brownfield and greenfield. We have the greenfield facility which will come in the next 15 months. So, and we are almost around 70% plus utilization of existing facilities. So do you see a possibility that within 15 months we will overshoot the demand that comes from various areas and we'll have to curtail that out because we are just already on 70%, correct?
Yes, but we are also doing certain expansions in the existing facilities which will help us further increase capacities in the existing facilities.
Okay, that's above 70% is what you're saying. Because right now, that's expansion on the brownfield side, right? Is what you're saying.
Correct.
Okay. So we don't see that demand will supersede the capacity, that expansion that we do. We will not end up into this situation, correct?
Hopefully not.
Okay. Okay, thank you.
All right.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Okay, thank you very much for your participation and support. Thanks a lot. Bye-bye.
Thank you. Bye-bye.
Thank you. On behalf of ADF Food Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.